Yes, sir. It's your boy B Hayes. We back with another one, guys. So it's over. It may be over, guys, because we got two good signs that we possibly about to see a crazy spike in the market. Even if it don't sustain itself, we know that, guys. But spikes, that's money making times. So let's go ahead and take a look at it, guys, on exactly why we believe, it may be over. Even though economist David, he predicts the S&P 500 will crash further 17% and says we're currently reliving the summer of 2008, guys. But we have some information that may be a big wrong that came out that caused the market to go in another turbulence to the downside when we experienced it about a couple weeks ago. And we also know, even before I mention this, we already anticipating, like I always say, is more than just one factor that goes into why the market comes down or why it goes up. It's also more than one factor on why stocks or securities or assets do what they do. It's never just one thing in particular. Sometimes something massive, some astounding news or something can come out and it possibly, override every other components. And it seemed as if that was the only thing that made it do what it do. But it's always, multiple components, guys, to why it's playing out the way it is. So anyways, if we go ahead and take a look at this, guys, inflation may be a lot lower than anyone thinks, even the feds. So inflation, CPI data could have been wrong, guys. And if this checks out right, this is going to put a whole lot more, money back into the market. A lot of more people will be less fearful. Let's go and take a look at this. Focusing on the monthly rate of change in the CPI shows prices falling from March to April. U.S. inflation in April plunged to an annualized rate of 4.1%, less than half of where it stood in the prior month. They said it was at 8.5% near its peak, guys. And they saying in April it plunged to a rate of 4.1%. That's almost half. And, they were saying expectations it hit a peak of 8.5, came down to 8.3. Analysts expected to come to 8.1. Even though we came down some from our peak, which is a good thing, we still had the market come down tumbling because it didn't reach analysts' expectations. And we know how, Wall Street like to operate whenever it don't do whatever they expect it to do. So let's go ahead and take a look at this further, guys. This will no doubt come as a surprise for those who focus only on the financial headlines. They informed us that the consumer prices index dipped slightly in April to 8.3% from 8.5%, what we was just stating. This modest decline was less than what Wall Street had been expecting. And on the day it was reported, the S&P 500 fell almost 2%, while the NASDAQ lost more than 3%. But the headline CPI number focusing on this 12-month rate of change, if you focus on the monthly rate of change as shown in the chart below, then it becomes apparent how much inflation dropped from March to April. So guys, inflation dropped significantly. And the feds could be wrong. A lot of people could have their information wrong as far as what we're looking at here. And if we look at this chart, the CPI 12-month rate of change is inflated by big jumps in June and October of 2021 and March of this year. As a result, the 12-month rate of change will remain high regardless of what happens to the CPI over the next couple months. One illustration of this, even if the CPI had remained unchanged from March to April, the headline number for April would still have been 7.9%. So even if the CPI had remained unchanged from March to April, the headline number for April would have still been 7.9%, which then in comparison, instead of us being 8.3% from the peak of 8.5% and analyst expectations were 8.1%, we would have came in great. We would have beat analyst expectations, and that possibly could have been what turned the market from a bear market going into a bullish market. Not just like that, but gave us that momentum for everybody to start buying in, have a couple spikes to come right back down, but create lower highs and overall turning us over into a bull market. So that 7.9% would have came in. That's exactly what would have came in. So that's insane, guys. This puts the current discussion about inflation in an entirely different light. The month-to-month inflation rate doesn't have to get any lower than it was in April in order for the CPI 12-month rate of change to fall to 4.1%. One of the past year's biggest spikes in inflation drop out of the trailing 12-month period. So guys, you guys see exactly what's going on. The CPI inflation data rate could have possibly been off a bit, and it will make a big difference in the overall market. It'll be one of those components, one of those factors that goes into play that we already anticipating on a spike from here without this information. With this information, that put more icing on the cake, and then whatever new information come out as well, guys. And from all the buyers, the billionaires that's loading up at these prices, trying to, you know, cut their losses, because they lost big on, you know, because a lot of millionaires and billionaires lost more than retail, being for the fact that they're more, you know, leveraged, over leveraged in these companies, guys. So you already know what to do. Like I say, guys, I'm expecting for the market to have a nice turnaround coming towards, you know, maybe hopefully we can get the lunchtime, because this whole morning has been insane. So, you know, without a doubt, we definitely expecting for a reversal come towards the end of the day and the next few hours. So you already know what to do, guys. Be safe out there, and you already know, add me on Instagram at the B Hayes Show. I love you. We out, and God bless you. We go.